this is what I found off the internet about Reach. I just scraped the internet. Let me go ahead and share my screen just really quick. Let us see. Am I able to maybe? Yeah, let me go ahead and share my screen. So I just scraped and found this off the internet and found some things. By their structure, they're mandated to distribute a substantial portion of their taxable income to shareholders
90%.
and dividends. So how much you said?
90%.
So for somebody like me that doesn't know too much about what's happening over here, I was like, hold on now. When I found that, I had to start digging deep. So please tell
Ooh.
me more. Tell me, I need your insight.
So you got different type of investors. You got a value investor, which that's like your Warren Buffett's. That's buy a great company at a low price and hold it. You got investors that's looking for growth. So that's investor, hey, I'm going to get into your Apples, Nvidias, a company that I know that's going to give me growth. You got dividend investors. And those are investors that's looking for companies that's going to pay them dividends.
Mm-hmm.
You know what a dividend is a company sets aside part of their earnings and
Mm-hmm.
they give it back to the shareholders. You got different type of dividend. You got I shouldn't say it like that. You got different levels of dividend companies is the way I should say it. You got what you call a dividend king. That means for 50 years straight, they've been increasing their dividend. It's only a few companies that can say that. You got your dividend aristocrats. So for 25 years, that company has been increasing their dividends. Now you got your REITs, like you just had up on the screen there. And
Mm-hmm.
those are real estate investment trusts. And I forget the year, 1960 or so, I want to say. Congress set aside a bill and it allowed them to start on the stock market. So they have to give 90% of their profits or income back to the investors
Right.
in dividend. So with that being said, just common sense. So let's just say in one of your businesses, you make $100. You got to give 90% of that $100 away. So you left with $10 to operate. You ain't gonna be able to grow very much, are you?
Ah, okay. So when you put it like that, okay, you're right. No, no, who would be able to grow with that?
But but as the investor, that might something that might be right up somebody's alley because well, hey, I got this company, I can invest in it, this real estate REIT. And hey, it's going to give me a great dividend. And one of the main strategies when it comes to dividends is, hey, you buy so much of that company that the dividends start buying you more shares of the company.
Mm-hmm.
That's like dividend investing 101 right there. Now, I'm not a big fan of dividends. The only really dividend I had a dividend portfolio. I closed it out strictly because I wanted to focus more on my growth because it's that you're in your 20s and you have more time for growth, whether you want to use it or not.
Mm-hmm.
I feel like I don't have the time. I got a time frame, hey, I want to be at this hard for like 5 years and then I want to be set. And that's what you can do with growth. You can do that with options.
Tell me more about the option. I'm hearing that being tossed around a lot when I'm researching and listening to people.
So an option is whenever an option is what they call a derivative of a stock. So it's like a underlying part of it. So you're not actually buying the stock unless you call that option. And what you do is so whenever you sign up with your broker, you get different levels. And most of the levels will let you trade options. And an option, you're thinking that the stock is going to go up or you're thinking that it's going to go down. You buy a call if you think it's going to go up. You buy a put if you think it's going to go down. Easiest way to remember it, hey, call somebody up, hey, put the phone down. And so on average, which is stocks that go a lot higher, but on average, a stock may move $2 or $3 in a day. It's some that move 10. But on average, it may move $2 or $3 on the day, up or down.
And
That's per share. And so with that being said, if you own, say, one share of Apple stock and it's $180 and then go up to 181, you made $1, right?
Yeah.
With an option, it's gonna multiply that. It's gonna times it. So depending on the strike price you get in and how long you hold it, and it's a lot of different factors to it. But that $1 move could double your money easily in a matter of minutes. When you see, I day trade, I swing trade, and then I also do leaps. So the difference, so a day trader is somebody I get in and out of position in one day. Sometimes it's a matter of minutes, sometimes it might be a few hours. A swing trade means that you just basically hold it from one day to the next day. You can do that with a stock, you can do that with an option. And again, my analogy, hey, if Apple goes from 180 and I'm holding the stock to today, and then tomorrow it goes to 181, hey, I just made $1. But if I knew it was going to make that move, or I was thinking it was going to make that move, and I got into an option and I played it right, well, hey, I can 2x my money, or I can make 20% on my money. The options give you the power to accelerate your growth. And that's another way of I keep throwing this word out, hedging against your losses. So say for instance, when we had this big downturn that just happened, a lot of people went in and puts in, hey, I'm gonna play the market down. So I'm making money on the way down, but I'm protecting my nest egg. So hey, their money might be a little bit lower in their steady investment, but with that option, I'm making money and I can just buy more shares. So when the market comes back up, hey, I'm back whole again and even more.
Man, that's some good stuff. I plan to dig super deep in that. It's very intriguing, especially for people that are looking for that long term that you can pull from and keep pulling from it. And it's going to keep multiplying. So the option can be bought. It almost sounds like a game of poker.
I feel like all of it's a game of chess. That's just life in general. It's all a game of chess. You got to learn some of the basics, which the way I started trading live. You can do paper trading, like Monopoly money, and you can set up an account and with this paper, and they give you so much money, and you trade. Hey, I think Apple is gonna go up today. You put in a call if you were right. Yeah, I think Apple is going down today. You put in a put. You can do it with paper. You don't have to necessarily do it with your own money.
And that's the part that I've heard is that you will get almost an allowance. And wouldn't that be a way is that the broker essentially is making money off of you?
So they do have something called margin, which I don't do margin. That's something totally different, where they'll give you physical money, say X amount of dollars.
Mhm.
And I don't do margin though.
No, thank you. For my understanding is with the margin, you get a certain amount and you guess how basically put your money in the pot. And if it's correct, you get to keep it. But if it's wrong, you pay out. And then that's how they get you. I think that's what's scary to somebody that really wants to get into it, but does not understand all that's going on there. So we would definitely advise somebody to do way more research when
Oh
dealing
yeah.
with margin.
Definitely. I don't do margin because they basically giving you a loan. It's got strings and other things attached to it. And I don't do it. I have cash accounts. So the cash that I put in, hey, that's what I'm allowed to trade with.
Okay.
And it's a lot of little things that you can do when you get into options. So if you buy a long dated option, you can sell, they call it a poor man's covered call. You can sell option, and that's just guaranteed money right there. A lot of little tricks to the trade.
That's hey, that sounds super good. I wanted to get back to my chart over here that I made.
Oh, go back
All
to
right.
the chart.
I want to
It's
get
some great information on that chart.
I want to get back over here and let's see. There we go. Can you see it?
Oh,
So I just went through it. The dividend yield, I basically searched for a certain percentage. I didn't
Mhm.
want to go closer to 1% because those payouts were in the cents. So everything right here is a dollar and some change all the way up. And I was
Mhm.
just curious, do you know of any of these, or are any of these ringing a bell to some of these tickers?
Oh yeah, APLE. I had that right there for a minute.
I'm still doing my research on some of these, but just looking them up and stuff like that. I see BlackRock is on there. Oxford Lane Capital is on there.
Oh, and you got the staple right there. Oh, Realty, that right there, that is a dividend aristocrat. They may have graduated up to the king. I can't remember. I don't have the list memorized.
Hmm.
But that O right there above Main Street Capital, O Realty. I had O Realty for a while too. O Realty. I had APLE for a minute. Them was the only REITs I had. Now, high yield dividend stocks, I had Verizon for a little bit. Right now, all I have is,
Goldman Sachs.
but so say for instance, you get O Realty,
Hmm.
and let me look up how much it is right now. I want to say it's probably about $50.
Which super low to get into, which I think it is about 50.
It's 55.
Okay.
So it's $55, and basically, like I said, the main strategy that people use with when it comes to dividend is they figure out, hey, this dividend stock, I buy so many of them. I buy, let's just say with that one, I think it was 5%. So you figure out, hey, I got to get 5%. I got to get 50 shares. Then well, it's going to be
And their
a little
payout
bit
is
over
every month,
every month. Every month.
318 per share.
You got to make sure you have your drip on too. If you don't have your drip on,
Automatically invest the dividend,
automatically reinvest it back and buy
reinvest.
that stock.
Hmm.
If it's not, it's gonna go into you just your buying power. And that's something whenever the first time you get a dividend, it asks you that question. Like every broker I've had, it asks you that question the first time.
Would you
You
like to
know?
reinvest in it? The
Hmm.
ones that I've used, I think this would be awesome for you to go in and be able to change it, because the ones that I've used, it was just like that one time, and then life just kept happening. You were able to use it. If you took a wrong turn, you couldn't correct it. I'm still wondering why. Well, I'm sure you can go in through the settings and stuff like that, but they ask one time
Yeah.
if you want to reinvest it. So you'll have to just check again the next month to see. But the ones like Robinhood, Stash, Core, from what I experienced, it was just like a one-off.
And that's like I said, those are good starter brokers, but you got to have a broker that's a little bit more advanced. Like me personally, like I said, I use Moo, I use Weeble. And one reason why I use those two more than anything is because any uninvested cash that I have is giving me 4% on that money. So that's better than just about most high yield savings accounts, which
Yeah.
that's better than a basic savings account by far. So the money that I have sitting in the account is gaining interest. And I'm like, wow, that's a no-brainer. Then they got great charts, great information, and most of the things are available on those formats. And that was one thing that I ran into when I had Acorn all those years ago, and Robinhood, which I still have Robinhood, but I
I'm
don't
sure
really.
they've gotten up to date with it now, but I do remember the earlier versions. It was just like, hey, here it is.
And they don't offer everything too. So
So things that you're talking about, I didn't even know you could do that. And you're doing that through your broker. And some of these applications and brokers do not offer that, which it makes me scratch my head, because someone's full potential is being cut off if they don't have that access, which
oh yeah.
I know there's levels to it, but I definitely will look into. You said you have Weeble and
And
Moon.
man, I got about seven of them.
Okay.
I got Fidelity and
Fidelity
E-Trade.
and trade. I'm curious to get into the options. I really just want to have the opportunity to the thing when I earn money. This is like business earnings. When I earn business earnings, what I'm trying to do is invest that and let that multiply and use that as almost like a double cash flow. So I'm earning
Mhm.
and then I invest it and it's earning. And then whenever I need to use it, I can use it or it can just keep growing. That's the goal. So I want to keep talking about that and getting into that and exploring that because it's fascinating, very fascinating.
So, so it's like this. It's a lot of free information out there. Most people, whenever they start a YouTube or TikTok or whatever platform they own, they're trying to get the viewers.
Yeah.
So they give out a lot of free game to try to get those viewers. And just about everybody has a video how to trade stock options for beginners. You just put that in YouTube and you'll get thousands and thousands of
Golden.
videos.
It is golden.
And like I said, it is, and you just find that person that you connect with, and hey, they're gonna show you because it's a lot of little nuances. It's different types of traders. I talked about the types of investors. There's types of traders too. You got a fundamental trader, you got a technical trader, and then you got a momentum trader. And it's like a momentum trader, they basically is just going to focus on the momentum of the market. They're going to on news stories, just give it flows. Technical traders, they're going to go off the technical things in the market, maybe different indicators. And then a fundamental trader is based off the fundamentals of the company. And you can, like I said, you can get, I try to do a little bit all of them, but realistically, my goal is to be an excellent technical trader because the technicals lead into the other ones, in my opinion. You can learn the other ones a little bit easier, but the technicals, you get to learn the candle structure, the different indicators. And when you get to learning that right there, it's amazing how different things will be indicated just by the charts. And it's crazy. Like the volume, when you learn just something as simple as the volume. If the market is going up, but the volume is not there, and then it just all of a sudden falls, well, you as a technical trader, you already have been focused on, hey, the volume is not there. This is not gonna last.
I'm here for
It's
it. Oh, I'm so here for it. It's a world. Jeez, it's a world. So how would you sum up our conversations today?
well, I think the goal is we all got 24 hours in a day, and instead of spending that 30 minutes a day watching cat videos or whatever you're doing, wasting time,
Mhm.
hey, take that, study a little bit about the stock market every day. The key to anything is hyper focus. That's your money too. You want to be diversified, but you got to have a hyper focus in something. If you're gonna hyper focus in something, let it be a great index fund, like VOO. Just and then once you're hyper focused in that right there, you broaden out and just let those investments grow. But definitely, like I said, just get into it. If I'm the type of person, I said I couldn't paper trade because I wouldn't take it seriously. I gotta lose a little bit. I'm gonna get upset. I'm not taking it seriously if it's not my money.
Right. There's no attachment. It's very there. It's an emotional game. It's a definitely emotional game, but I don't think it should be. I think if you go in with the mindset of I'm doing this to grow, like you said, hyper focus and read about it.
Hey,
We
I'm gonna
don't.
tell you this too. Let me give you another nugget. I just thought
Uh-huh.
about something.
Oh,
The
please do.
market goes up 70% of the time. 70% of the time, the market is gonna be green. It's going up. Hey, bulls make money, bears make money, hogs get slaughtered. That's like a saying on the stock market. And you were talking about something too, and we got off subject, but you was talking about FUD. FUD is
Wow.
fear, uncertainty, and doubt. And
Uh,
that's what people put into the atmosphere, just a whole bunch of nonsense. People confuse. It's called FUD.
that's what I was talking about because as somebody that's trying to start, it could be a huge detour because they're like, hold on, so they're saying this. Should I do this? And there's the whole discussion of FDIC, how secure the money is and stuff like that, and losing your stuff
I
like
don't know
that.
how long you want this video to be,
Oh man.
but at the end of the day, if your dollar can make you more money why not let it? And that's what the stock market is there for. That's what high yield savings accounts are for. That's what the bond market is for. That's what investing in gold is for. Let it make you some money.